Alright guys, welcome to our today's episode. Today I'll be teaching about order block and fair value gaps. Order block and fair value gaps. These are things you need when you're doing technical analysis. When you want to analyze a chart, you need to understand what order blocks and fair value gap, because buying from the wrong order block can make you lose money. Alright, then you need to understand what a fair value gap is. It will help you to choose the accurate order block. Okay, so without wasting much of your time, let's dive into what we have today. Alright, so order block. When we talk about order block, what comes into your mind? Order block. Now, from the definition, order block is the last candle, alright, before a move that breaks structure. I've already talked about structure in the previous class. So we have what we call bullish order block, and we have what bearish order block. Alright, order block is divided into two. We have the bullish, bullish OB, and what bearish OB. Alright, the OB is simply what order block, just the short form for order block. Now bullish OB and bearish OB. Now what is bullish OB? Bullish OB is simply an order block that you find around what a demand zone. Now I gave an instance when I was drawing demand levels. I said we'll have something like this: break to the upside, break to the upside, break to the upside. This is what a break of structure, a break of structure, a break of structure. That ascertain that this market is what bullish. A bullish market is simply what going up. Alright, so I told you that our demand levels are these lows. Okay, these lows, these lows. Now inside, this is the demand level. These are demand level. You look for what bullish order block around demand zones. You don't go to supply zones and start looking for what bullish order block. Alright, you look for bullish order block around what demand zones, and bullish order block are the last candle. You see that when this guy came down to this point, it moved and then it broke what structure. The last bearish candle. When we'll be drawing, when I will take you to live chart, I will show you, because in the chart we have different colors. Alright, there are red candles, there are green candles. So maybe in that chart you'll be able to understand when I mean the last bearish or red candle. Alright, let's take for instance, this guy is coming down. This guy is coming down, coming down, coming down, coming down, coming down. At a point, it starts going up. Alright, to break structure. Okay, so the last candle, the last red candle, okay, the last red candle, that is if this guy is green candle. Alright, if in the chart this guy is red candle, then this guy becomes what our last what red candle. That last red candle is what your order block. You can see it is what around the what the demand zone. Is around what the demand zones. Okay, when you look at the demand zone, inside the demand zone you look at what the last candle before the move that breaks structure. Inside the demand zone you look at the last red candle before the move that do what break structure. Inside the demand zone you look at the last red candle before the move that do what break structure. That last red candle is what your order block. Last red candle before the move that broke structure. Okay, last red candle before the move that do what broke structure is what your bullish order block. You always find it in what in demand zones. Okay, so for bearish order block, let's say this is the market coming down. You see how it's coming down. So we broke to the downside, breaking structure to the downside, you see, and then we'll have what this zone as what supply zones. Okay, so we have supply zones. Now this guy is a bullish move. That is, in the chart is always with what represented with red green candles. So this guy is going up, going up, going up. At this point he start coming down to break structure. The last green candle before the move that breaks structure is what? Your order block. You see it is always around what? The supply zone. And that other block there that is in the supply zone is what we call what? The bearish order block. Alright? The bearish order block. You can find them inside what? Supply zones. Inside the supply zones. You can find them inside what? The supply zone. For the supply zone, some persons use Fibonacci. There are Fibonacci levels to draw their supply zone, but I don't actually use Fibonacci. Okay? I just use what? The last red. I use my order block directly. I use my order block directly. If it's in a bullish setting, I look for the what? The bullish order block. If it is in a bearish setting, I look for the what? Bearish order block. Do not worry, on our practical chart example, I will show you exactly how to spot the order block in the chart. Okay, this is just for illustration what purpose. So that is that about what? Bearish order block, and this is that about what? Bullish order block. You can see it is very what? Simple. Then when it comes to what? Fair value gap is simply a gap. Some persons call it imbalance. You know, for example, let's say let's say the market just broke structure, very bullish. Okay, now the market broke structure and we're expecting it to come down to this what? Demand level. We're expecting to come down to this demand level, so that we look for buying opportunity and then we'll continue what? The buy. So when I check around this area, the move, we call it displacement, the strong impulsive move that pushes the market to break this structure, leaving what? A gap. That strong impulsive move that causes market to break this structure, leaving a gap or imbalance. You always see it is like this. Let's say this is our candle. This is one candle. This is kind of drawing is what for Japanese candlestick pattern. You know, in the chart we have line chart, we have the Japanese candlestick. So this is the what? The pattern, the Japanese candlestick pattern. I'm using it to show you an example of what a fair value gap is. So we have another candle. Let's say we have another candle here, and then we have another candle here. Now it is three candles in three candle settings. Okay, three candles where you see the high of the candle and the low of the candle leaving a gap. The high of the candle and the low of the candle leaving a gap. They are not touching each other. I think it will be more clear when we go to the market chart, so that you understand example of what imbalance. But I will put that on overlay. Okay, I'll put that on overlay and I will show you guys what I mean about what fair value gap. So it's just simply the distance, the imbalance, the gap that markets left while trying to break structure is what we value gap. And what do we use fair value gap for? We use fair value gap as part of what confirmation. When we see fair value gap, it tells us that yes, there was a displacement. Smart money was actually involved in this push, because there was a lot of money that came in and pumped the market so fast, leaving a gap. Okay, so it tells us that there is a strong displacement, and that when we see a fair value gap, then our order block becomes what? Valid. Okay, our order block becomes valid to look at buying a coin at that area. Not just any fair value gap. You must align the fair value gap with market structures, so that you don't go and be counter trading and then you end up losing money. No. So you must align the fair value gaps, the order blocks, and your bias, your direction, the direction of the market. That is the market structure. You must align these three things so that when you take trade, your trade is actually high probability. Okay, you don't just take trade anyhow. So that is that about fair value gap. Fair value gap, it is just an imbalance, a gap that was left due to an impulsive move that broke structure. It is always around this area. Before we break structure, we can find a fair value gap, but not always. There are some break of structure that does not have a fair value gap. Okay, it's just like, let's say a gap. Okay, good. Let's say a gap. Imagine price came down from this point, it pushed and broke structure. This is break of structure. This is break of structure here. It broke structure, but why it is going to break structure? There was a gap. It left a gap. This gap now becomes a fair value gap. Alright, it's an imbalance. It becomes the fair value gap. It will be more clear when we get to the chart, when we start analyzing. Then I will show you all of this. But I'm just telling you what an order block is and a fair value gap. An order block simply is an area where you look to buy. It is always around either demand or supply. Okay, it is always around either demand or supply. When you see it around the demand zone, it becomes a bullish order block, and when you see it around the supply zone, it becomes a bearish order block. Then fair value gap is just the gap left due to impulsive move that broke structure, and it only tell us that smart money are involved in the move, and that move has displacement. Okay, so it validates to an extent. It validates our order block. All right, so when I'm saying that it validates our order block, I'm trying to let you know that you don't just see fair value gap and you place trade in the order block. No, you have to align these things with higher time frame structure, market structure. All right, what the big boys are doing to be able to have a good high probability trade. So that is that about order block and fair value gap. So if today is your first time of joining us in this class, please do well to subscribe to our channel and turn on notification bell so that you stay active whenever we upload more content such as this. Thank you very much for your time, and God bless you. I love you.